What's up, guys? Welcome again. We're going to cover Forex terminology. This is going to be a very long topic because everything, um, everything that is associated with Forex in terms of terminology, so that when you meet another trader, that trader mentions something, you're able to understand. You're able to have a conversation with other traders. Not basically Forex. These terms are used even in banks. They're even used in shares. So it is very educational. So Forex terminologies. The forex market comes with its own terms, just like any other business has its own terms. So before you get into deeper into trading, it's best that you learn these terminologies. That you'll encounter in your trading journey. Number one, we have exchange rate. You hear there are several exchanges. Let's first tackle the word exchange. And the word rate. Exchange is the trading one item to another. In this particular topic, we are handling now the currencies, trading one currency to another. Now, the exchange rate is the value of one currency expressed in terms of another. A good example is Euro USD. We covered currency pairs in the previous topic. So Euro is the best currency, USD is the quote currency. So Euro USD is at a price of 1.32. So this basically means 1 euro is worth 1.32 US dollars. So if you have 1 euro, you have 1.32 US dollar. In this case, euro is stronger as compared to the US dollar. So this price usually changes. Currently, for the euro USD, let me see what's the price. Now, for the euro USD, currently the price is at currently the price is at 1.21626. That is the current price. That is the exchange rate. If you go to any bank, if you go to Equity, if you go to KCB, if you're in America, this is the exchange that you're going to get. So if you're coming from United States, from Euro, you want to convert that Euro to USD, this will be the exchange rate. Number two, sorry, we have pips. These are very important term. These are point in percentage. It is abbreviated to pips. So P points I in and then percentage pips. And then it is a small change in movement of a currency pair. Let's have a look at Euro USD, the currency pair. One pip for the Euro USD is equal to 0.0001. And one pip for USD JPY is 0.01. Different currency pairs have different calculation in terms of pips, in terms of even the exchange rate. So you'll find that Euro USD will have 0.001, and then USD JPY will have 0.01. Let me share something. Let's have a look at this chart. This is the current. This is the current. This is the current FX market. So in this example, currently USD is priced at 1.2166. That means for 1 euro, you have 1.21652 US dollars. So in this case, now the pip is 0.000, 3 zeros and then 1, right? Correct. Now, if price moves, we're going to cover these tools. You're going to see this one help you in calculation. So in this term, it has already moved. This one calculates 14.9. These are tools that we're going to cover, I think, in the next topic. So the pips is it is the term that is being used to calculate the small movement in a currency pair, and at the same time, this is one that is used now to calculate the profit. We're going to cover profit in the next topic. Number three, we have bulls and bears. Bulls indicates an uptrend of a trending market, also known as long and short. So you hear that there's a bull run. That means the market is going up, up, up. The reason why they choose bull is because bull they usually attack. With the head, and then for them to kill, they throw the head up. Bears is a downtrend. That is a downtrending market. The market is heading downwards. So most of the time you'll hear them either bears, short, or downtrend. The reason why they chose bears is because a bear, when it wants to kill its prey, it usually stands up like a human being, and then it tramps on you, so that so it goes down on you to make its kill. Now, another term is bullish and bearish candles. Bullish candle is a candle that closes as a buy candle. Bearish candle is a candle that closes as a sell candle. Um, we're going to cover candlestick. It will indicate how a buy candle looks like and how a sell candle looks like. Basically, a buy candle is a candle that opens low and it closes. It opens low and closes high. A bearish candle is a candle that opens high and it closes low. Let's have a brief. Let's have a brief look at it. Yeah. Now in this live market, this one is a bull candle. This one, what is happening right now, is a bearish candle. So price opened here, it closed here, and then this candlestick, price opened here. Currently, it is down. So that means price is going down. Or let's say use this one. Price opened here, it closed here. For bearish candle, price opened here, it closed here. Now I've colored my candlesticks to be red and green. Red to indicate bearish candle, and the greens to indicate the bullish candle. We're going to cover in detail about candlestick. Just one topic talking about candlestick. It is called candlestick science. So let's go to the next terminology. The next terminology is price and candlestick. Apparently, candlestick is around. Candlestick is a representation of price movement used by traders to analyze and make decisions of either to buy or sell. Then price is the exact worth of a given asset pair we are reviewing currently. So as we saw earlier, euro, let's go back. Now this one is a candlestick, and then this one is the price. All these are the prices, these are the candlestick. As the candlestick is defined as the representation of price movement used by traders to analyze and make decisions. That's why we have a bear candlestick, and we have a bull candlestick. That means price opened at this price, opened at this particular price 1.21, then it went ahead up to 1.215. Right? Are we good? Okay, let's proceed. Um, let's proceed to the next one. The next terminology is bid and ask. Now the bid and ask, this is how much you're willing to sell any given pair. For us, the bid price is what you're going to. If you're in a sell, a trader can sell the base currency to their broker, and then for the ask, this. And then the ask is, this is how much you are willing to buy a given pair. For that, the ask price is, you can buy the base currency from your broker. Remember, the broker is the one that is connecting you directly to the market, right? Therefore, the broker is also in business. Since he's in business, he's going to buy them at a particular price and sell you at a particular price. So the buy is when you're selling. The bid is when you're selling. That is what the broker is presenting to you. And then the ask is when you're buying. If you have a buy order, that is what you're going to buy from your broker. Remember, you're buying from your broker. The broker is now connecting you to the liquidity provider. That is the retail market maker, like Citadel Securities. We covered that in our first topic. So a graphical view is this. This is the bid price, and then this is the ask price. In your MT4, we're going to define MT4. This is the trading platform. It usually gives you two prices. There's the bid price and then the ask price. So when you sell, you're selling at this price. You're not selling at this price. You're selling it at this price. When you're buying at this price and not this price. Correct? Let's have let's look at this. Let's look at the live market. Now, this is the price that is being presented by our broker. So when you're trading when you want to buy, you're buying at this price. If you're going to sell, this broker is not. Sometimes brokers don't indicate. They do not show the. They do not show the ask price. Let's see if this one can show us the ask price. Solid symbol. High low bid and ask price. Yes, this one can show. They're not showing. Yeah, now you can see there are two lines here. It is very it is very it is very it's very small. So you'll see that there's a blue. Let me see if we can get something here. Apparently that is the best this broker can offer. Apparently this is the best that this broker can offer. So in your MT4 you're going to see the difference between the very fine detail here. That is the bid and the ask price. Let's see if I can get it a little better. That one is not helping. Anyway, let's move on. In your MT4, you're going to see now the bid and the ask price. I can get it from MT4. Problem is I cannot share my MT4 using the software I'm using. So you're going to see the sell and the bid and the buy. Now, if you're buying using the bid price. If you're selling using the ask price. Now, the difference between the sell quote and the buy quote, or the bid and the offer price. For example, if Euro USD reads 1.32, the spread is the difference between the bid and ask. Remember, we said that the broker is also in business, is the one connecting you now to the market. So he's going to buy at a particular price and then sell you at another price. Now that small margin is now called the price. In order to break even on a trade, a position must move in the direction of the trade by an amount equal to the spread. So we're going to cover this term break even just in a few. So the spread is the difference between the ask price and the bid price. Let's do something graphical. So this is the bid price, this is the ask price. So the bid price is 1.36407. This is the bid. The ask price is 1.36428. This is the ask price. Now this is the difference. The difference is remember we said we talked about now this. We're talking about the spread. Now this is the difference that is making the spread. And then earlier on we talked about pips. Now this is 21 micro pips. It translates to 2.1 pips. Remember we said Euro USD is 0.0. These are 3 zeros and then 1. So here these are 3 zeros and then we have 2. So it is 2 pips and then there's a 1. So it is 2.1 pips. Now let's cover sell and buy. Sell is you can place a sell on a currency if you predict it's going down. So if it is a bearish, you sell. If you want to sell the USD, and the USD strengthen against euro, you will be there in a profitable trade. And then buy, you can place a buy on a currency pair if you predict the pair is going up. So if you, in Euro USD, if you buy the Euro USD pair, you're buying Euro, you're selling USD. So in a scenario whereby the Euro becomes stronger than the USD, you'll be profitable. Remember in currency pair, when you buy the base currency and you sell the quote currency. If you sell the base currency and you buy the quote currency. Kindly get that clear. And then we have stop loss and take profit. Stop loss is a risk management tool. This is put when you are in a trade to safeguard you from any loss more than what you wish to incur, also abbreviated as SI. Take profit is also a risk management tool. This is put when you're in a trade. It is something automatic. The trade closes when it hits your targeted price, so that you don't have to close manually. So maybe you are traveling and maybe you suspect you don't have internet, so you set stop loss and take profit, so that when prices reaches that particular price, it closes. And then we have technicals. Technicals, also known as technical analysis. This is whereby traders sit and analyze any given pair to predict where a currency pair might be going in terms of direction. The broker usually provides the trading platform called MetaTrader 4 or MT5 or MT4, both available in MacBook, in iOS, um, in Windows, in Android, and in iPhone. So this is whereby you'll be now doing now the technical analysis. The analysis that are technical and fundamental. Fundamental is when you are analyzing the news. Technicals is when you're analyzing the price. How is the price behaving in this particular region? How is the price behaving at a particular zone? Most of the time, guys, you throw in indicators like moving average. They throw in indicators like Ichimoku, like RSI. There's so many indicators in this in the trading world. So these are the ones that enable you to make a decision of whether to buy or sell. Because remember, you're not gambling. You're not just throwing buy and sell orders. You are doing analysis and making a quick. You're making a wise decision whether to buy or sell. It is not gambling. It is a decision that you make. And then we have 84 and 95. 84 stands for MetaTrader 4. This is the platform used to initiate trades. There's a mobile version and a desktop version. We have MT5. MT5 is an upgrade of MT4 with better features and improved ones. This is the platform that you use to trade, to execute orders, and to do your analysis. We have entry, exit, and break even. Entry is the point at which you enter trade, whether be it a buy or sell. So that will be your entry. Exit, the point at which you exit a trade, whether in loss or profit. So you have either set a TP, you either set a stop loss or a check profit. Now these are your exit tools. And then we have break even. This means you close the trade and it had no effect on your account, neither a win or a loss. Remember when you're in the trade, maybe it has moved something like 20 pips. We have already covered pips, so I believe you already know what a pip is. So if it has moved already 20 pips, you put your stop loss at break even. That means even if this trade goes against your analysis, you will neither win nor lose. And then we have profit and loss. Profit is most of the time is when you've made money. So you hear a trader saying that my trade has hit a TP. So that means they took their profit from that particular trade. And then a loss, you'll hear a trader saying it has hit my stop loss or they're closed manually. So basically a loss is when you lost money. And then margin call and pre-margin. Margin call is when the money you have in your trading account cannot cover the loss. Basically, you won't be able to trade again. Your account is blown. And then we have free margin. Free margin is the amount that is available in your trading account. This gives you an option. This gives you the muscle to open a new trade, to make or lose money. Most of the time, it's making. And then we have leverage and equity. Basically, means you're in control of a large sum of money with little of the money. This is what the broker gives you. The broker offers different leverages. There's 1 to 40 up to 1 to 1,000. So if you have 1 to 1,000, you can be able to leverage your account by 1,000. If the broker gives you 1 to 40, you can only leverage your amount that is available in your trading account by 40. And then we have equity. This is the amount that you have plus or minus any trades you're in the loss. So if you have done a deposit of 500 Kenya shillings, your equity is $5. Most of the time it is usually in dollars. That is your equity. If you lose a trade, maybe $1, that is now $4. If you win $10, your equity grows to $15. That way you have a better purchasing power. And then we have chart and quote. Chart is the ones I've been going back to. This is the chart that shows the candlesticks. It shows how the price is moving. Um, we usually use that to analyze, to make decisions on whether to buy or sell. Quotes, so these are different currency pairs for you to choose from. Currency pairs, we talked of GBP USD, talk of major and minor pairs. Major is Euro USD, GBP USD, and USD JPY. Minors, we talk of GBP JPY, the cross pairs, the one that do not involve USD dollar. Our next topic is lot size. See you guys in the next topic. For any queries, comment in the comment section, and you can visit us at our DND 6th floor Nakuru office. See you guys in the next video.